that's just creating better cash flow, like we said before, right? So you can go purchase more property, you can put renovations in your current property, take a trip. It's your money. It's the time value of money.
What are some of the pros and what are some of the cons that people need to understand when they're looking into a cost seg?
The pros being, right, so it's an accelerated form of depreciation. So you're able to wipe out your current year liability or reduce it quite significantly. That's just creating better cash flow, like we said before, right? So you can go purchase more property, you can put renovations in your current property, take a trip. It's your money. It's the time value of money there. When it comes to the side effects or the negatives to cost seg, there really aren't many. It's just if it's a fit for you. That may be if you're operating at a loss, right? You may not need to do a cost seg study, or if you're doing just a quick flip.
Yeah, in most cases, as far as we're concerned, there's really only two reasons why you would perhaps not venture into a cost seg on your property. First one being, as Sean mentioned, if you just don't have any tax liability to defer, if your property is not throwing off any income. Although a caveat to that is if you feel that your property will begin generating income in years moving forward, it may behoove you to do the cost seg analysis this year and roll the unused benefit into future years because of the declining bonus depreciation. This year, if you put the asset in place in 2023, you'll get 80% bonus. If you wait a year, you lose another 20 points. You'll only get 60%. So it may benefit you to do the analysis this year. If you don't have any tax obligation offset, that's fine. Roll it forward into future years. So that'd be one possible reason why you wouldn't do a cost seg. The other one, as Sean alluded to, is if you're going to buy and flip the asset in a year or so, because they've got this thing called recapture, where you've got to pay a tax on the depreciation that you took. So you've got to give a fair share of the benefit back in the current year. Although, having said that, we've had a number of clients that will still do it because they got a year's worth of other people's money. They were able to use the money that for a year that they didn't have to pay in their taxes, knowing that they had to pay it back in a future year, but they got the benefit of being able to utilize the money for a year or so. But those would really be the only drawbacks that we come across.
This the depreciation recapture how does that work?
Well, the depreciation that you got, let's say you got $1 million worth of tax relief as a result of the cost seg, and then you flip the property next year, you've got to pay a 25% tax on that on the benefit that you had received in the current year. So there's a little bit of a give back there. You got to pay the piper sooner or later.
So would it be in our $3.9 million situation, right? Your 1.2 that you did the cost seg on, you got the bonus depreciation. If you were to go ahead and flip it in, 2 years, are you saying you would have to give around $300,000 back?
That's correct.
Okay. Still a good deal. I'd rather take $1 million now and give 300 back, right?
Yeah. Still the time value of money. That's what it boils down to. In cost seg, you're not getting any more, not any less. It's really just accelerating the depreciation habit today. It's reversing the standard 39-year depreciation.